All right, what's going on, guys? Jeff here. Today it's Thursday. Yesterday we had our CPI. The CPI data coming out, which is 0.5% month over month, 7% year over year. The market was basically a little bit happy about it, but at the same time, we kind of have a lot of up and down in the market yesterday because basically people like the fact that we actually hit 0.5% on the estimates, but at the same time, when we look at the bigger scales of things, we still hit 7% year over year inflation, which is still in a sort of hyper inflated economy. But I think that at the same time, we do have an inflection point downwards where we might be seeing maybe a 0.4 or 0.5% inflation data for January as well. So hopefully that to be the case, because if in January we do not see something along that line, I have a very, very good feeling that we will be getting back to a hyperinflated economy, and then it will just kind of continue on from there. But anyway, let's cover some news today. Over here, let's look at Wall Street journals. Okay. Yeah, so this article that I saw earlier was actually quite interesting. Why 7% inflation today is far different than what it was back in 1982. So yesterday I actually did a little bit of research for what actually happened back in the 1980s. Basically, it was due to the whole oil crisis, and also the recession back then was a little bit different from what we have today. It wasn't really because of a massive printing of the money by the government sector, but it's more so because of the situation that actually came up to that. But yeah, over here you can see that the last time that 7% inflation that the U.S. economy actually had was actually back in the summer of 1982, and that's about all. You see, that's about all the two periods have in common. Other than that, everything else is actually a little bit different. So, like I said before, it peaked at 14.8%, and this was because of the oil crisis. Okay, it pushed up the oil prices, core inflation reached 13.6%. After which, then they tried to get tighter monetary policy, like what Jerome Powell is actually trying to do right now. Of course, people do have their own thinking about it, like myself as well. But yeah, because of that, we don't know how are they going to increase rate hikes, how are they going to try to taper back down for us to have a more valuable dollar in the long run. But anyway, over here, 4 decades of generally low single-digit inflation would follow. So this is actually what we are hoping to go for, because right now, what they're actually basically saying here is that right after your 1982, for the next few decades, we actually had severely lower inflation, such as your 4%, 5%, 3%, 2%, and ultimately we want to try to average it down to about 3% or so. But yeah, okay, so dramatic success, blah blah blah. Unemployment. Okay, so the main difference between the whole 1982 and also what we have today in 2021 is also because of unemployment. Because back then we actually had max unemployment, while right now we're actually on route to max employment. And that's a very, very huge difference, especially that is being one of the core taper conditions for us to have either max unemployment or max employment, and which is why I think this is the big differing point. And because of this, since then it has been falling rapidly, which is why this is what I'm saying. We are on route to having max employment. Right now, if I'm not mistaken, from the previous employment report that we did see, whites are having 2.3% unemployment, blacks are having 7.1%, Asians are having 3%, Hispanic was having 4.9%. So yeah, as compared to previously, we were having like 10% unemployment throughout, which was a flat rate of 10%, which was very, very bad. So yeah, this is a lot different, which is why the market basically kind of just wanted to shrug off the entire fact that we had 7%, and you can basically see the whole market sentiment happening in the market yesterday, where you see the market basically saying, "Oh, okay, we hit 0.5% month over month. It's all right. We're good. We actually hit our estimate. We did not miss it badly or anything." So the market basically just okay, we can just continue going up and up and up. But the thing is that then they realized, oh, hold on, but we're still at 7%, so they went down and down and down and down. But after which, then people kind of just feel that, like, this was not really that worthy of a dip, and a lot of people basically just bought back on the dip, kind of thing. Yeah. But all right, anyway, second news. Apple's Metaverse prospect produced a real optimism for investors. Okay, so for this one, I did receive a comment yesterday asking me about my opinion on the Metaverse coins. What are the coins that I'm actually interested in, especially going into the Metaverse? I actually have a pre-recorded video for that, and I'll probably be uploading that either on Saturday or the next Wednesday. But yeah, I'll be talking more about the metaverse as well, because I'm actually quite interested in the metaverse as well, simply because it's also one of the buzzwords that we are actually having in our current, our current era of investing. So over here, you can see, Apple may not have triggered the current buzz about the metaverse, but the company is reaping the benefits simply because of it being a tech company. And also, similarly, Apple simply have very close ties with the metaverse in a lot of sense, and also because just I think about last month, we actually have reports that Apple started to pay a huge bonus to a lot of their lead engineers, hoping that they will stay in the company a lot longer, just so that they can actually work on this metaverse. Of course, the whole part of the metaverse side is actually alleged by a lot of insiders, but we're not very sure what Apple is actually thinking about doing. Right now, the future project for Apple is most likely the whole metaverse. We are expecting a VR headset, and we are expecting an Apple Car. So that's why I think for Apple-wise, it's very hard for us to think that they are not going to innovate. I feel that Apple is definitely going to be innovating in the future, especially because in 2021, I think the innovation for Apple wasn't at its highest other than the M1 chips innovation. But after that, basically everything else was just a renewed or a repackage of the previous flagship products. So yeah, I think Apple is going to be an interesting play for 2022 and possibly 2023. Of course, I don't see the Apple Car coming anytime soon. I feel the Apple Car might not even come at all. Actually, I honestly speaking, I feel that for the Apple Car, there is a good possibility that Apple might just work together with another EV company. That's really a very possible outcome. I feel that if Apple suddenly just hit up Lucid, or if they want to hit up Rivian, or they want to hit up, I don't think they're gonna hit up Tesla because Tesla can do it themselves. But maybe they can hit up like Akimoto, they can hit up Arrival, whoever it is, they can hit up another EV company and just be like, okay, you know what? How about we just work together on a deal? And when that actually goes through, Apple can just be the operating system for the EV itself, instead of Apple just going in on the whole venture of getting into another EV on themselves. But of course, I think that Apple is currently at the top of the chain, and I think that they might be too prideful for them to actually work together with another EV company that's already out there. So yeah, the chances of them actually just creating their own Apple Car is a lot higher anyway. But yeah, I'm just saying, there is a possibility. Okay. But yeah, over here you can see, basically they're talking about how people are actually talking about the metaverse. The interest in metaverse gained new momentum ever since Mark Zuckerberg actually changed the former knowing as Facebook over to Meta platforms, which the ticker symbol has not actually changed. Right now it's still under FB. They're going to be changing it to MVRS. But yeah, they are going to be capitalizing on the whole VR and AR side of things, and I think that's going to be interesting. So yeah, this is basically just the metaverse side of things and how Apple is basically getting out the best part of it. TPG, I talked about TPG I think about like 2-3 days ago, when I was talking about how they are going to come out as one of the higher leading IPOs. Personally speaking, I'm not very excited about TPG. I don't really know much about TPG, but I will probably be keeping a lookout on it, because it is a highly sought after IPO after all. If it is a very popular IPO, there is a chance that we might be able to make a trade somewhere. Okay, and lastly, this one is actually very interesting, which I very like a lot, which is the Fed's chairperson as of right now. Because when tomorrow comes, he's not going to be vice chair. Okay, but the worst part is he actually left 2 weeks earlier, so he actually left already. So Richard Clarida. So Richard Clarida basically is better known for insider trading with the knowledge that he had using the Feds. Of course, this is all alleged, okay? I'm not saying that he did. I'm not saying that he did not, okay? I do not know, okay? Do not sue me. Do not ask me anything. I don't know, okay? But anyway, allegedly, Richard Clarida basically used insider information to trade on stocks in the open market. So let's see. Sorry. That's bad. Hold on. Yeah, okay. Richard Clarida stocks trade. Let's see what we get from the stock trade in Richard Clarida's side. Okay. Let's see what he actually make. All right, so Richard Clarida traded between $1 million to $5 million out of a bond funds into a stocks fund one day before Jerome Powell issued a statement flagging possible policy action as the pandemic worsened. This is most probably the best trades in the trade history because he knows for a fact that Jerome Powell is definitely going to be coming out with a statement. And because of that, he actually traded money out of his bond funds into his stocks fund. Because when this actually happened, it simply means that he knows what is going to happen. Of course, he is the vice chairperson, okay, and he traded $1 to $5 million. That's actually very very huge, especially when their pay. Okay, I'm almost certain that Richard Clarida does not have a lot of he doesn't really salary yet. Salary. Let's look. I wonder if Wikipedia actually shows it. But let's see. Did it actually show the? Oh damn! Okay, he released an album. No way. Okay, but anyway, I don't think he shows it. Okay, but I'm almost certain that for politicians, they basically earn about like $200,000 to $300,000 a year. But let's just say because he's the vice chair, let's exaggerate that a little bit and let's bring it up to I don't know like 500K. He is trading $1 to $5 million. That's still a lot of money. Okay, and basically because of that, he is known for the person who did a lot of insider trading alongside with Nancy Pelosi, which again, allegedly, they are doing insider trading. I don't know. But the thing about the hearing that happened for the Jerome Powell's renomination hearing, what actually was being said by Jerome Powell to try to fix this situation. So the thing is that what is actually happening right now is that if a politician or a person in information, especially in Congress, wants to buy a stock, basically they can just buy a stock right now, and in 45 days, you can basically go to the website to check what did they buy, how much did they buy, and what did they actually buy, be it your options, be it your securities, and whatnot. Okay, so it normally get reported 45 days later, and a lot of people, of course, myself included, think that this is very very unfair because a lot of time trades can go the other way in a day or even 2 days. Okay, sometimes even in the day itself, intraday trading is very very normal. So if they are given the chance to report it 45 days later, basically, it's almost like a free loophole for them to earn money. Okay, so a lot of people basically are asking Nancy Pelosi to just be like, all right, is it possible for them to actually come out to say that they will immediately report right after they buy and sell whatever stocks and options that they are going to be trading in. But the thing is that that's going to be unfair to them, apparently. So what Jerome Powell actually did say in the hearing was that he would change it in a sense where if a congressperson intend to buy a stock or buy an option, he or she will basically set in a buy offer for a certain stock. So, for example, Nancy Pelosi bought call options on Roblox, for example. Okay, so what happens is that if Nancy Pelosi want to buy Roblox, basically she will say that on today, on the 13th of January, she will say she want to buy a Roblox call ending at whenever it is, and it will only be executed 45 days later. And during the 45 day later, basically what will happen is that it will also get updated on the website itself, and then we'll all be notified that Nancy Pelosi just bought Roblox calls, for example. and that's kind of what Jerome Powell is going towards, and I think that is actually a fair trade. Because one thing is that, of course, it's going to be unfair for be it your Nancy Pelosi, be it for your Richard Clarida, because any of the congressperson who actually wanted to try to do insider trading using this, basically they cannot really predict what happens 45 days later, and because of that, it suddenly became a fairer trading ground for the both of the congressperson and also for the retail traders like you and I. But yeah, anyway, I'm not sure when this is gonna be implemented, because Elizabeth Warren actually asked Jerome Powell point blank during the hearing as well, and Jerome Powell couldn't really give an answer as well. So we don't know when this will actually happen, when this will actually commence. But when it does commence, then I'm pretty sure we'll know about it as well. And if you want to see, you can just go to Nancy Pelosi ETF. You'll be surprised there's a Nancy Pelosi ETF. I actually saw it. Hold on. Yeah, it's on Bazinga. Basically, people are there's this platform called Unusual Whales, and they actually created this platform where they can just check, like, oh, okay, what is Nancy Pelosi buying, and then you can just do an ETF, and basically people can just buy into this ETF so that people can get into Nancy Pelosi's position. That's kind of messed up, but that's kind of what people are actually looking. And Nancy Pelosi made a lot of money in 2019 and 2020, but of course, a lot of time. She just shrugged it off and said that it's not her, it's her spouse. Her spouse is a trader, and she's not. She's basically just like, a proper person that's doing all these kind of trades and whatnot. But yeah, we all know that she's probably insider trading, allegedly. Okay, do not sue me. But yeah, anyway, that's all I have for today, actually. Tomorrow is going to be the last day of the week, and also Monday we'll be having MLK Day. So that's gonna be an off day for the market. So it's gonna be a long weekend, a 3-day weekend, and the market will open on Tuesday instead. By then, tomorrow I might be talking a little bit more about my trades instead of the news. But I'll see how it goes. By then, thank you guys for watching, and I'll see you guys tomorrow.